But I'm thrilled to work with this team. We've got 4 initiatives. PTAC is one of them. The Innovation Center is one of them. The Immigration Assistance Center, and the Office of Regulatory Relief. That's the new kind of condensed business services team. Ryan is still a managing director over corporate retention and recruitment and our international diplomacy and trade missions with the governor, things like that. So little changes here, but Alicia has been working on the Utah Small Business Credit Initiative now for over a year. We're thrilled that she kind of dove in and has helped put this program together. And we're just kind of at the final stages here to get it launched, and really excited to share the information with all of you, and for you then to help us get out to the Utah entrepreneurs. That's why we're here, to support small businesses in Utah. So thanks for being here, and back to you.
That was great. Okay. With an agenda. So we've got 2 hours. We're going to do this for the first 45 minutes. This is going to be a lot of what the banks are wanting to hear. Then we have lunch. Costa Vida will be here. We've got 30 minutes. We can mingle. You're welcome to ask questions during that time. Then at 12:15, we'll talk program impact. So really looking at what we've done with a lot of the conversations we've had around socially and economically disadvantaged marketing, our branding, how we're getting the word out, and plans for 2023. Okay, so let me begin. So the Utah Small Business Credit Initiative, I know most of you are very familiar, so I'll keep this very brief. But for any of my newcomers to this meeting, this program has $69 million total. It's federal funding. It runs until 2030, and its objective is to expand access to capital for small businesses in Utah.
Alicia, real quick, would it be possible to send these slides after?
Yes.
Just so people, if you need them,
Get the numbers.
Yeah.
send those a little bit easier to
Absolutely.
focus on. Good point.
Thank you. So the Utah Small Business Credit Initiative, we've identified 4 primary objectives that are very federally inspired, and we also have additional layers that we've added to each individual program. So overall, the program's objectives are to expand access to capital for small businesses. And this can mean 2 things. One is expanding access, so obviously giving loans to those who are not already receiving loans, and then having really good rates for borrowers. 2, create high quality jobs. 3, expand access to credit for underserved communities. That's a really important part of this program. And then 4, we have a goal to leverage our funding 10 to 1. And that essentially means for every $1 of public capital, we're incentivizing $10 of private investment. So the $69 million program in that case would result in $690 million of investment in Utah over the next 7 years. So you can see the impact is pretty significant. We have a lot of businesses who are really excited, and we are also excited. Okay, so a little bit of a review. So I know it's been a second since we've met. We met last in July. So what we've achieved so far, we've had these meetings with you all, and I really want to highlight that because I know it's been time from your schedule. I know that you've given us a lot of input. So I just want to highlight that we're really grateful for your input, and it's really informed this program that we are presenting here today. We have gotten our application approved by Treasury, which means our $69 million grant application was approved, and we have received the funding. So it is here, and we are ready to use it. So when I talk about strategically what we're doing, I'm really referring to 2 things. One is the capital programs. Are 3 that I'll talk about in a second. The other is our SETI strategy, which we had to give to Treasury. We had to really, really work hard on that to make sure that this program achieves what it needs to do, make sure that access to capital is equitable, and make sure that our programmatically we have the right strings in place to make that happen. And also from an outreach, partnership, marketing side, we're also ready to accomplish that. In addition, we applied for a technical assistance grant for $1.2 million to accompany our USBCI programs. So more on that in part 2 of our meeting. But let's see. Okay, so I'm going to shift into the capital programs. So I'm going to just go through each program one by one, and at the close of each program, I'll open it up for questions if you have them. I think part of this meeting, part of this meeting will be just me kind of letting you know maybe terms of the program. I don't think we'll have time to go to deep dive into every single piece of the program. However, we will be having meetings in January that are just program by program with the enrolled lenders. So if you're a lender who is interested, you're welcome to meet with me to talk about specifics. We will have a program policy document that lines it all out for you. And we will have meetings by program to talk about any implementation, best practices, and so forth. So part of our new brand is these boxes up here, the Capital Access Program, the Loan Guarantee Program, and the Loan Participation Program. So together, those are USBCI, right? So this is our logo, this is our brand. Many thanks to our communications team for putting this together. I mentioned in our last meeting, our goal with this brand is to be really accessible, really colorful, really bright, to kind of help make marketing easy and make it very identifiable because it will last so long, all 7 years. Okay, so let me begin with the first program, the Capital Access Program. So Utah has chosen 3 programs. You've all heard a little bit about each one in these meetings. Some of you are more familiar than others, I think, if you've had meetings with me one-on-one about the terms. But the first of these programs is called the Capital Access Program. So this program is really cool. It's really key to our socially and economically disadvantaged our marketing strategy. So this program is a flexible loan loss reserve program that provides lenders with a way to fund projects considered too risky for conventional lending. So essentially, it's a microloan program. This is really the program that helps borrowers who need small amounts of capital, who are maybe more on the risky side of the spectrum. It has an average loan size of $50,000, but the total scope of the program is $25,000 up to $5 million. It's great for startup lending, so if there are any startup initiatives, entrepreneurship initiatives, it's really good for that. It also enhances community reinvestment efforts, or Reinvestment Act efforts. So those are 3 big pieces of this program. Structurally, it's a loan loss reserve, so the borrower and the lender contribute between 2 to 7% into a loan loss reserve fund. Then our program, the USBCI cap, will match their combined contribution. And then essentially the lenders just build this reserve fund up, and it covers up to 100% of losses of enrolled loans. So this is the only program that covers 100% of losses. Due to its structure, it's really powerful that way, and that's why it can really help incentivize more risky lending than some of these other programs. The pieces of this, the part that says borrower and lender contribute, that is federally mandated. So we did not choose that the borrower has to contribute. I have asked many questions about how we can get around that, if we could waive that, if lenders could absorb that if they choose to, if we could finance that. They have said no. They both contribute up front, but they can choose their percentage. So it can be as low as 1% and 1%, borrower lender, all the way up to 3.5%, 3.5%, for a combined total of up to 7%. So the state matches that, and that's how that loan loss reserve fund works. Eligible lenders in this program include insured depository institutions, insured credit unions, or CDFIs. Again, this is federally mandated, so these are pulled directly from guidelines, and that is who is eligible to participate. So borrower and loan size requirements for this program, we're targeting employers with under 250 employees. And the target loan size is between $25,000 and $250,000. So strategically, this program is positioned as the most accessible program, as the smallest loan size program with probably the shorter terms. But it's really important to serving our underserved narrative, making sure we have really accessible access to capital. And so if anyone, like for example, if a borrower doesn't qualify for some of our other options, this can be a great option to kind of leapfrog them into other capital options. It can be a great way for them to build a relationship with lenders, to build a credit history, and to do that in order to get to some of the bigger options that they're not eligible quite yet. So that is a high level of the capital access program. Does anyone have questions about this program? Yeah.
Do you share the losses equally? So if we're each contributing 7%, 7%,
Yes.
Do you share 50%, or does first loss go to the state?
50-50.
50/50?
Mhm.
So, okay, thank you.
Yeah.
Does the borrower and the lender have to match their percentage, or can you make your 7% up if you take 2% from the borrower, 5%?
They have to match. Mhm. Yeah,
And this, I just want to confirm, this program is for for-profit companies.
yes, and nonprofits are also eligible.
Oh, nonprofits are too.
If the funding is for a business purpose only.
Okay.
So if the nonprofit needs funding for a working capital expense, like space or equipment, then they would be eligible for this program.
Is the lender underwriting the application?
Yes. So this program relies on the lender for all underwriting and decision-making regarding the loan underwriting. We'll be doing compliance checks, so obviously there are things we're looking for on the federal side. We've got them all in form. We're not doing any underwriting regarding credit history, profitability, financials. The lenders will be the ones choosing.
Why not? Any other compliance restrictions? Relative to who lenders can lend to, or guardrails on fees or rates?
Yeah, there is a guardrail on fees and rates, and it's it's in the policy doc. It's the NCUA rate standard that's applied across all of the USBCI programs. But we don't have any additional interest rate or fee caps on it other than that one.
Sorry, I'm not familiar with this standard rate.
The NCUA, I could look it up after this
Sorry.
meeting.
It's the National Credit Union.
Yeah.
Right, but does that put a cap on rates? Like a
It does, I think it's like 18%.
It is
So I
18%.
think something.
Oh, is it 18? Okay,
Yeah,
that's fine. Thank
thank you. For that. Any other questions? Okay. Great, so that is the first program. Our second program is called the Loan Guarantee Program. So this strategically is it's positioned as our largest program, doing the largest dollar amounts. It provides lenders with a partial loan guarantee of up to 80% of the loan. It has a target term of 3 to 5 years, target loan size between 25,000 and 3 million. And this is the one that's administered by the Utah Small Business Growth Initiative. So I will pass the torch to Luann if you'd like to just say a few words. I know we're still in the process of this one.
I don't have my contract yet.
Yeah, we're still working on that.
So the state won't really let me talk too many details. No. That's right. So we're excited about running the loan guarantee program. We ran it in USBCI 1. So we are excited about getting going. We're going to do, when it's approved, we're going to do master agreements with lenders so that we don't have to do one for every loan that you bring to us. We'll be following mostly all the same guidelines. Ours are slightly different because we're a guaranteed fund. We will go up to 80%, but we also have to trigger that leverage piece. So we'll be looking for some where they're not leveraged at 80%. And we'll be looking for a mix because we want to make at least our one-to-one with leverage to make sure the program's set. Because our agreement isn't ready, we're not finalizing all of our agreements, so we'll be rolling ours out after the 1st of January to do that. And I'm very interested. I'm going to be here for the rest of the meeting, so anybody who's interested, I'd be happy to put you on our list, and we'll start talking again once we have the agreement signed. So, but again, we think this is a great program. We think it's really going to be useful in Utah, and these will be for loans that are not SBA qualified. I just want to make sure that's made clear. That was one of the Treasury's big things, was the fact that we need loans that don't work for lenders to do with SBA. So pretty much that's what ours is going to be. So thank you.
Thank you so much. One thing I should mention in terms of funding allocation. So earlier I said the whole program has $69 million. This loan guarantee program has $31 million. The capital access program has $10.3 million. So once again, that's the loan guarantee program has $31 million. The capital access program has $10.3 million.
Let me just clarify that we don't have that money right now.
Yeah, so
It's in 3 tranches.
yes.
So you have to spend your first tranche before you can get your second tranche. So
Who's you? Who's you?
I work for USBCI.
No, I'm
And so-
saying,
So the program,
Loan guarantee. So
yeah,
It comes in tranches, so if you were looking for a loan guarantee, we don't have $31 million right now. It comes in 3 parts. So our first one will be 9 million.
Yeah.
Delicious.
Yeah.
So the way the funding will work, the treasury has established those tranches or those rounds. So they have
Mhm.
given a first round that will come to us as the state. We have then contracted and we'll transfer that over as soon as that's received by us. So the funding's here, and then once that is fully obligated, deployed, then that triggers the next round or tranche to come in. So the full programmatic funding is there, but it just comes in 3 cycles. So once it's fully deployed and in the community in service,
Mhm.
we'll have access to the next round. So
Exactly.
it's not a question of whether it will come,
Yeah.
it's just the timing.
For those who don't know, this is Cameron Dalton. He's our managing director of operations.
Exactly.
Sorry for the comment.
That's a great addition.
I was doing the finances before, so that's my side of the world.
Perfect. And that's a great addition. So to add to that, we are not having to reapply for the next tranches. That approval process is over. We have been approved for all 69 million. Treasury is just giving it to us in tranches in order to, I guess, make sure we are using it well. They've attached a few incentives to it, which we will accomplish. And that helps us make sure the funding lasts for the full term of the program and it doesn't run out really quickly. So it'll help give a lot of lenders and small businesses. Okay. Any questions for me or Luann on the loan guarantee program? Okay, so our third program is called the Loan Participation Program. So this program has $27.6 million in it. So this is positioned as the middle program in terms of accessibility and size. So the way this is structured is the state purchases up to 50% of a loan originated by a lender to help small businesses gain access to credit. I'll get to the structure of how that happens on the next slide, but high level target term of 3 to 5 years. We are not restricting it to 3 to 5 years, however, so longer term lengths are allowed. We are just trying to see smaller term lengths overall in order to achieve our leverage ratio. And so the way this works is public funds will receive an interest rate of 3% set by the state. The borrower then would receive the blended rate between the market and state rates. So if you have a loan for $100, bank does the loan, USBCI purchases up to 50% of this loan. So that's the interest rate. And so that's how you see that blended rate. The private capital still receives the market rate, but we see that blend. Okay, so on the eligible lender side, yeah.
Sorry, was it up to 50%? What would make it not 50?
We say up to 50%. If the lender chooses not to do 50, they're welcome to. I think 50 is the best deal for the borrower.
But there's no requirements to get to 50. It's just whatever the lender can get up.
Exactly. 50%, I think, would give the borrower the best deal because that 50-50 obviously is the best for the interest rate. I think a lower participation does better for the leverage ratio. So there's a bit of a balancing of objectives here. But what we're going to do is we're going to try really hard in the first year or two of the program to really aim for our leverage goals. So that increases our flexibility to really do loans to those who need them after that. And so if whoever enrolls in this program, there will be more information on that and it will be available. So for eligible lenders, this is where this program is really, really cool, but a little more complex. This is the first time we're rolling this out in Utah. So this program is new to Utah. So there will be a little bit of training needed. We'll be doing those trainings in January. So essentially, in the last slide, I mentioned the state purchases a participation of up to 50%. But we, the state, as in Go Utah, will not be directly managing those funds. We will be partnering with CDFIs/RLFs, and that means Community Development Financial Institutions and revolving loan funds. So in other words, we're mission-based lenders, and they will be deploying the public capital on our behalf. They will then partner with banks and credit unions who will provide the private capital. And then all lenders have to sign an agreement with us to participate. The CDFI RLF will take the burden of the reporting compliance burden. Banks and credit unions will just need to be compliant with the program, meaning the loans will need to be compliant. We'll have a checklist for that. It should be fairly simple. So there will be a full checklist of borrower size, loan size, et cetera, et cetera, et cetera. Webinars and trainings will be provided in the first quarter of 2023, because we do know with this program, this will likely be the most complex part of the setup, is getting these partnerships set up, getting those relationships made. But it is really cool because it does help pull funding concentrate into place. Concentrated. We are really looking forward to partnering with our revolving loan fund partners. And then that also enables us to really easily partner with more banks and credit unions without you having to go through the full application process with us. Okay, so any questions on this section? I know that this one is going to need a training or two in January, so that is coming.
So Alicia, can you hear me? This is Carol Patterson with MAG. So when this blend, so it's a blended rate. The market rate is the private, right? And I'm an RLF, so I would be considered public. And I have to do it at 3%. I'm administering for the state. So when the payments come in from the borrower, the half that goes to the bank, they service that, and I'm just servicing the state side, correct? I can't hear you. I don't know if you're talking.
Correct.
Okay. And as far as reporting goes, I report. I don't have to worry about the reporting on the bank side.
So you'll report on behalf of the program. So whenever we do receive loans for the program, we will ask what the participation size is, as well as the full loan size is. And that's important to us because of that leverage requirement. We want to know how much private capital is being incentivized via this funding. But we will have templates for reporting. Most of the reporting will come from the loan applications themselves. Every loan will need to be an application to us itself. So once a lender is enrolled in the program, they then pass loans to us on a case-by-case basis. We do a compliance check. We're not underwriting anything. We're just compliance checking. And then that's kind of how that process goes. And as part of that, we will be collecting the metrics you provide us in this application. And then quarterly, we'll give you a template to provide some additional data on those loans, such as how they're doing, who's paid back, who hasn't, so we're aware of what the program is looking like and can pass that information to Treasury. So those reporting dates would be quarterly and annually. And again, there will be a template provided, so you can just add the metrics and send it right to us.
Okay, but the borrower is making two payments, one to the bank and one to me, right?
No.
So how does that work?
A payment to the bank, then the bank makes the payment.
Then the bank gives me my portion?
Yep.
Yeah,
Of the
so the
loan?
bank primary lender in this model, so they're going to be dealing with they're going to have the relationship with the lender. The lender will, or sorry, the borrower will interface with that primary lender. And the CDFI RLL helps on the back end and helps bring that the public capital into the picture.
I assume this is akin to a participation agreement. Right?
True, yeah, true participation.
What that is.
Carry pass through.
Yep.
Yeah, there's a standard for how to legal document agreements like this. Yeah.
I did not hear that, but anyway, I will attend these seminars and I'm sure or the webinars and I'll learn more. Thank you.
Yeah, no problem. And I can repeat that for everyone on the line. We said it was Perry Pursue, the bank will be the primary lender. And then if you have any questions, like feel free to email me, Carol, and we can meet after this meeting. Okay, cool. So let's, I guess shifting to borrower loan size requirements for this program. So this program also targets employers with fewer than 250 employees. A target loan size between $250,000 and $1 million, but this loan, it can go lower. So this is not saying it's exclusively $250,000 to $1 million, but this is our target with the program. Our loan policy doc will have more of the nitty-gritty of what is eligible, but this program will be targeting loans of $250,000 to $1 million. The maximum participation amount is $500,000. So we don't have a restriction on the size of the total loan. You could do a huge loan if you want to with private capital, but in terms of what the state will contribute to one transaction, the max is $500,000. Okay, any questions on the loan participation program?
Are there term length guidelines on this one?
So this one will have a target term of 3 to 5 years, but no restrictions, so it can go up to 20 years.
Alicia, question.
Yeah.
So programs like, like PTAC, where we deal with small businesses. And as we hear that they are looking for loans, do we direct them to the lender, like whatever bank or credit union that's participating, or to you and your program?
So you can direct them to me and I will kind of serve as a matchmaker to connect them to wherever they need to go. This program has a lot of partnerships. So from the small business perspective, it can be confusing for them to know where to go. That's my biggest question I get from small businesses right now is, hey, how do I know what lender to go to? How do I know which program I need to be in? So we actually published an FAQ yesterday for small businesses with answers to many of these questions that can help them know which program is right for them, where they should be going. But essentially, they are always welcome to reach out to me. We will be announcing every approved lender in the program via email and on our webpage, and that'll be the primary home base businesses can go to see, hey, here are the options and the lenders. This program seems like a good fit for me. They can approach the lender. Ultimately, the lender will be the one to tell the business that they are eligible for that program. So we, the state, we won't be telling them, hey, this bank, they can do this loan for like X whatever percentage. We will just be explaining, hey, this is the program. Here is generally what it looks for, and you can go talk to a lender one-on-one. They'll have to review, obviously, all of your details, and they can let you know for sure if it's a good fit for you.
So you act more like kind of like a clearinghouse.
Yeah, kind of like that. Yeah.
And or does loan participation use also the guarantee program?
No, so one borrower could be enrolled in multiple USBCI programs at once, but they cannot be for the same use. And they would have to provide, every lender will have to provide documentation of why the loan could not have been serviced without the program. So there are a lot of steps. So I guess to summarize, a business could be in multiple if they choose that route, but it cannot be for the same loan purpose. And I think strategically, we would like to see maybe some of our capital access program lender or borrowers move into the participation program and the guarantee program. If they're not eligible yet, they could use that first program as a way to get into these larger, lower rate options. Okay, so those are our 3 programs. That's a high level. Obviously, the policy documents will be sent out. They will have more details regarding what is required of this program. From a compliance perspective, because I think that's going to be a big question everyone has is, hey, what are the federal strings attached to this funding? What do I need to be doing? What is the administrative burden? So a lot of that will be in the document. From a compliance perspective, we will be building checklists and we will give you checklists. We will send them to you when you're enrolled. And so there will be a pre-screening checklist. So you don't even go through the application process if they're not eligible. We don't want to waste your time. But if they are, you can go through the application and all the checklists are they're listed, sign off. You won't need to be really looking at the rules and regulations. They all are checklisted for you. So these programs are designed to fill the 3 needs in the capital access ecosystem that we talked a lot about in our last community partner meetings. So I talked already about how CAP is crucial and it can springboard into larger, lower rate programs. And I mentioned that borrowers can receive loans from multiple programs, but only for different purposes. A few additional things to mention with these programs. So rural Utah is obviously really important to this administration. So we have added a layer that all programs must have at least 1 lender enrolled in every AOG region. That's Association of Governments region. This does not affect you as the lenders or partners. That's mostly on me and Luann as making sure that we have geographic coverage with our programs and making sure all of Utah is equally serviced. There is also something called the SETI objective. So SETI in this program refers to socially and economically disadvantaged individual. And that is a really important piece of the strategy of this program is we want to make sure capital is equitably distributed through both the program design, which I've just presented, and through marketing and outreach. So the number that the Treasury has set for us is 29%. That is the number that if we hit, we will receive an additional $4 million in funding. So if we hit this, we receive that money. If we don't, we do not receive that money. So obviously we are going to hit this, and it's really important for us that we not only hit this, but we exceed, we make sure the funding is equitably distributed. Any questions here? Okay, so, and I just want to close on this section. So I know a lot of you have given a lot of feedback into this program. I know we brought you in early. We were pulling in input, and so it might feel like a long time because we brought you in early. We didn't just announce it to you. So I just want to tell you that we're really grateful for your input and give you a little bit of a picture of what that input has given us and given the national government. I've given notes from our meetings, our key takeaways to the national SSBCI program to give them feedback about how our ecosystem is doing. They've been really, really intrigued by what everyone has had to say, especially related to steady demographic reporting, which there was some feedback about how we do that. So we have passed all of that on to them, and they are very grateful, and it's gone all the way to the top, the director of the Treasury SSBCI program. So next, we're working with the other states. So we've been working a lot with some states, like Montana has been very helpful. They have run the participation program in the past. We're also working with other states to give them templates of what we're doing. So a lot of other states are working and learning from Utah as well. So that's been really cool to see. And Utah has also been invited to participate in the Treasury's Steady Community of Practice white paper, which is really cool. Obviously, the program is still launching, so we don't want to get ahead of ourselves. But the approval was based on our programmatic strategy that we got approved based on that we'll be executing now. So we're really excited to start this process. Really grateful for your feedback. So I just want to let you know that we are really, that your feedback has really been helpful, that it has informed the design, and that it has been heard nationally. Okay, so from a resource perspective, so here's what will be provided to the lenders. So we have program policy documents for each program. They're like 10 pages long of all of the nitty-gritty of collateral requirements, eligibility requirements, treasury requirements, etc. And that'll give you a really clear picture of what the admin burden is going to be on these programs. We also have all forms and checklists provided for you, which will be just templates that you can use. You don't need to do anything to them. You just have the borrower sign them. And then program trainings will be provided in first quarter of 2023. So for all enrolled lenders or lenders interested in participating, we will be holding program specific trainings to review these materials and help everyone understand the program, know the best practices, and best implement them to serve borrowers and their organization. The lender application process, this is what it looks like. So lenders should meet with me first for a USBCI consultation. Next will be an application via Salesforce. Then there will be a master agreement with Go Utah. So this Salesforce application, we've found a few compliance things. We got a new compliance national standards thing from Treasury we've got to review. We also have a few things we're looking at in terms of programmatic guidelines. So we apologize that the Salesforce link has been delayed to the business or to the lenders who have had a consultation with me so far. But will be on the way shortly. And then once that goes through, essentially the lenders go through, they are approved. We'll send you an agreement, you sign, and at that point you are an approved lender to then start participating in the program. Okay, so that is my list. I saw a question, yeah.
Quick question. Are the companies, do they have to be in the 5 targeted industries that no? Okay.
They don't have to be. We don't have any restrictions excluding certain business types. But we will definitely be marketing towards our targeted industries because they're very important to us. So we will be making sure our materials get to manufacturing businesses, aerospace businesses, life sciences, IT, financial services, and really making sure the word gets out to them because we want to make sure they have access to the program. Yeah.
When do you anticipate having the lender list available as to who's participating?
So we will be announcing lenders on a rolling basis as we get them enrolled. So I anticipate having a lender enrolled in the coming weeks, but we will announce that via email and via website you will know when that happens. Yes.
Speaking of timing though, when it comes to doing a major rollout to the manufacturers or the people involved, because obviously you want to have some lenders want together, you want to be able to build a collateral, you want to, whatever else. What's just your rough timeframe?
Yeah, as soon as we have lenders enrolled in the program, we can begin having borrowers apply through them. I anticipate it'll be about 6 months of building our lender list. Obviously, there will be some who are really excited, who maybe have been following along and are ready to roll right now. Others might want to review the policy document, be a little more, take a little more time to apply. So I'm sure we will have a few at the beginning of stages of the program, and then we'll slowly build our lender list as we go through. Like I mentioned, this is a 7-year program. We're also rolling out 2 brand new programs to Utah. Our participation program model and our capital access model are brand new. So there will be lender trainings. I'm sure there will be a bit of a ramp up as we get these processes rolling with them.
Alicia, you might want to mention the web address and how to sign up for the newsletter.
Yeah, okay, we'll do. There is a website. It actually was updated yesterday. And I have a few links at the end of this slide. So I'll cover that in the outreach and marketing section. Okay. Great, yes.
I would imagine that their application processes are pretty much going to be standard across whatever lender we have.
Yes. All lenders will follow the same checklist from a USBCI side in terms of what we are enforcing. Each lender will be able to underwrite loans individually. So one lender may have more risky underwriting criteria than the other. So there will be a little bit of variety in which lenders are enrolled in which program. There will also be variety in terms of which programs and which lenders are compatible. I'm sure maybe more lenders who have more of an appetite for risk might like the capital access program better because it really does expand access. Traditional banks will be more interested in the guarantee or the participation program because it helps with collateral problems, but it doesn't quite go all the way to where maybe micro lenders or CDFIs will go or revolving loan funds. So there is a bit of variety in terms of which lenders will be offering at what rates. But I think it's cool because that does lean into the competition of it. We will be we'll be watching lenders, and there will be a spectrum, and I'll be available to help businesses know where they should go and where they're a good fit.
So the business putting the application, is it going to be several boxes check, or the application is standard and their lender then says, okay, you can go, you're available for 1, 2, or 3.
So it'll look like essentially if a borrower applies to a lender, the lender might get them and say, hey, I can't quite do a loan, but I could use USBCI to do this where I wouldn't before. At that point, the lender determines which program would be the best fit for them. There are some data requirements. We do have some forms the borrower will need to fill if they are going to enroll in our program. But the way it's structured is the borrower applies to the lender submits an application to us, we do the compliance check for approval. At that point, we submit or we send a commitment letter to the lender that says, hey, you've been approved for XX dollars. Please have the borrower fill these forms out and send them back to us. Those include the demographic reporting requirements that Treasury requires that let us know who our borrowers are, gender, race, etc. I can show you that form if you're interested. That one is federally mandated. And so that's a requirement of close, not a requirement of the application.
Am I getting ahead of myself if I said asked? Is there training for the borrowers so that way they know exactly what documents to make sure that they with this application automatically upfront instead of trying to reduce the time, trying to make it more efficient?
For sure. So we will be training our lenders. We will not be interacting directly with borrowers on a one-to-one basis, but we do have resources available for them. There will be 2 stages of paperwork for the borrowers in this application. The first will be the upfront application, and then once they're approved, there will be a few additional pieces of information we need. We can't require them all at the same time because of potential lawsuits. The demographic reporting requirements are in particular really sensitive. We've gone back and forth a lot with Treasury on how to best do that. So they have a template they provided. They have said that we cannot stray from the template, and our legal team and I actually have sent options to them to maybe add to that template because it is a little bit vague. It asks for are you underserved on the basis of gender, race? There's a whole list, but it does not get data as close as what race you are, which gender you are. So our data will be a little bit vague. We tried to add more support to that document to pull in better data, but we were told no because of violations of law. So that is where we're at. But we are tied to the federal strings on that account. But we will be watching it really closely to make sure that it serves its purpose. We get really good data and make sure the borrowers don't have to do a lot of the paperwork. I'll also be attaching a letter with that state of the paperwork to the borrower, explaining what the program is and why we have these forms. If they're like, this is a weird question or something like that on these treasury forms, I'll just have a letter from me that says, hey, here's the objective of the program, and kind of explain the purpose of these forms because it's not quite intuitive from the forms themselves. I will also be, I hold office hours for businesses every week on Wednesdays at 2 p.m. That link is on our website. I've had great attendance so far. I have like 8 to 10 businesses every week asking questions. I just explain the program. I talk them through what it could look like and roughly what they should prepare to talk to a lender based on feedback I've gotten from lenders over the last year.
How do they find information? Is it at the end of your? Thanks.
So I'll talk more about the borrowers in the next section of this presentation. For now, let's adjourn to lunch. We have Costa Vida provided. We've got until 12:15. Would love to see everyone mix and mingle, and I'd love to talk to some of you. So yeah, let's break for lunch. Thanks, everybody.
First one?
Go for it.
But I'll send you an email when I get back. I was like, oh. Yeah. Right on now.
Okay.
Do a micro.
Yeah, in fact, yes, we were happy to, there's something that.
Where.
Yeah, even if we're so happy to do it.
It'll be a big thing.
Have.
Everybody, we're just gonna bring it back really quick. So hope you enjoyed lunch and appreciate you being with us to the second half of the meeting. Let's see, I'm gonna make sure the online the participants can hear me. Can you guys hear me? Let's see. I've got to exit to start this again. Okay, welcome back to screen sharing. Okay, can you all hear me online?
They say they can hear you.
Yes. Perfect. Okay, thank you so much. Okay, so. There we go. Okay. So as we transition to the second half of the meeting, we're going to pivot a little bit out of program details, rates, terms, etc., into program impact. So I'm going to open this really quick. So here's a rough agenda of what we'll cover for the next, for the remainder of the meeting. So we'll cover marketing resources and deliverables, a USBCI dashboard, and our technical assistance program. And all of these were built in response to a lot of the feedback we got from you over the last year. So please know this is all in response to what you've given us, and we are doing our best to make sure we do all of the ideation we did, due diligence, and the execution. Okay, so a big thing we've talked about thus far is how do we get the message out to small businesses? Ultimately, that's who we're trying to serve. All the programs have been built to really expand access for them, to lower terms from them. So now we're at the point where we're asking the question, how do we help them know about the program? And how do we help them really feel comfortable applying to the program and know it's for them? So you've seen our brand before. This is our logo that will be going on all the materials. This will be our brand for the program. And so I'll begin by talking about our marketing resources that will be available to everyone to help target to your communities. So the first thing we'll provide is a partner marketing kit. This will include a newsletter blurb and image, social tiles. We have our webpage, obviously, as well as a one-pager and flyer. So this will be publicly available on the website for anyone to download at any point. All partners are welcome to use it, to send things out, to post things. Obviously, we'll also be working hard to get the message out. But I think with this program, it's been really cool to see the outreach so far. I think because everyone's been involved throughout the process, there is a really big demand for the program. I mean, I get so many emails from small businesses. I'm seeing them every week in my office hours. The demand is there, and so now we just need to continue spreading the word and make sure that everyone hears about it who would be interested in applying. One thing that was addressed in previous meetings was the need for language accessibility, which we understand is really important. Specifically, we talked about having 5 languages of translation. So we will be translating the flyer into 5 languages. It will be available on our website for download in each of those languages. I believe the 5 are Navajo, Spanish, German, Portuguese, and I'm forgetting the last one, but we're using the report published by the Department of Health, and that's how we've gotten the data to determine the top 5 languages. We also have an additional language resource coming, and I'll talk about that in a second. So, resources for small businesses. So we have a few things open now. We have published a new small business FAQ on our website, and I will actually just open it right now.
Alicia, the other language is Chinese.
Chinese, thank you. So we've got a frequently asked questions page available for small businesses. based on all the questions I've gotten over the last 6 months. So things to help businesses know where to apply. Obviously, our website and our programmatic materials are going to be greatly catered towards the lenders because they're ultimately who is applying to us. But this is a resource to small businesses to really help them know where to go. So they can talk to me, they can join the office hours, or they can look here. We've got application information, program information, application requirements. Do I have to pay the funding back? Yes, you do. That kind of thing.
Wait, what? It's not a grant.
It's not free. Anyway, so this is always available if you want to send businesses here. I'll include this as part of the deck when I send it out. We also have USBCI office hours. The link to register is here on the website. We will also be wanting to partner on events as we move forward in 2023. So if you or someone you know would like to partner on an event to get the word out, to spread the message, if you would like support in getting it out to communities, please reach out to me and we can see what we can do. We also have our email list right here. So this is, the link is on the website. If anyone wants to sign up, this is the link, or this is the list that will send program updates to the public. Obviously, I have this list here, the community partner list, which is a little bit different. This USBCI newsletter will be primarily for small businesses, so the content will be mostly targeted towards them and how they access the program, spotlighting lenders as they're enrolled. We'll also be doing success stories as we start enrolling loans that will really highlight the partners involved. So if you're a partner who helps us look at a loan, we'd love to feature you, we'd love to feature the bank, we'd love to feature the business and help get the press out there. So I will come back to my deck. Okay, so this next one, a USBCI dashboard. So something we talked about a lot in our previous meetings was the need for us to monitor the first 6 months of the program. I think there were some concerns that how do we know the funding is going where it needs to be? And if we wait until, you know, you get quarterly reports, you get annual reports, it's too late to turn the program around. You've already moved through a lot of money. So what we'll be doing is we'll be updating this dashboard monthly on the website. So we'll be posting metrics for you all to see. So we will not be holding a monthly meeting, as I'm sure you all are really sad about, but we will be posting metrics online. So we will be doing everything we can to be transparent about metrics, including funding, dispersed, where we're at the stage of the game in terms of a tranche, when we're getting the next round of funding, our SETI metrics that we pull in and we're reporting to Treasury, we'll post those as well. I think with metrics, we'll be posting everything we have based on the Treasury forms that are collecting them. It will be information such as, it'll be based on gender, race, etc., but we don't have the breakdowns by race and by gender. Again, I mentioned we tried to change that, but we were not able to. So we will be doing our best to publish those and keep an eye on the data. We and many other states have already expressed to Treasury how we maybe feel about that form and any additions we would like to see, but that is not published yet. So this is how it will be for the first tranche of the program, just due to Treasury guidelines. We'll also be posting metrics regarding our outreach. We'll be doing everything we can to get the word out. So we'll be posting metrics regarding events attended, downloads on our flyers, etc., so that everyone can see the work that's being done and we can all work together to get the word out to the communities. Okay, so this one is a fun one. I'm excited to talk about this. So something that's been mentioned occasionally in our previous meetings is this technical assistance program, $1.2 million that we are applying to and have applied to, actually, that was in October. So it's currently at the stage that the capital programs were at 6 months ago, where we applied and now we're waiting. So I get to tell you that we're waiting. But we're really excited about what we've applied for. And the first is a Spanish language technical assistance program, which provides USBCI enrolled lenders with Spanish translation services. So this basically means that if you're a lender in USBCI, you don't have to do everything yourself. If you need support, we will have some support for borrowers you're working with to complete this program, to complete the forms. obviously, we do have some federal forms that they will need to fill out. From a language perspective, that is tricky to translate all the forms into another language and call them legally binding. So what we're providing is interpretation and technical assistance to help borrowers navigate these forms and understand what they're for. So any questions regarding this program?
Did you say, sorry,
No, of course.
did you say this is the proposal that you're putting to try to get additional funding for this translation?
Yeah, so this was our grant proposal to Treasury. So I will keep you posted on when we are approved for this and if Treasury has any revisions. And it should be spring 2023, though I hesitate to give timelines for the Treasury approval. Yeah,
Have you thought about programmatically how you're gonna do this technical assistance? I mean, are you gonna be working with local partners or is this all in-house? Like how,
Yeah.
just a little bit more details on the tech.
yeah, for sure. So we will be structuring this as a contract. We'll be partnering with a partner who will apply through a fair bid to be the partner who provides Spanish TA. There will be one source so that we can make sure we have a really great partner who will then be able to support our other lenders. We will have checks and balances in place regarding loan volume. And we've done our own projections, but as we get closer to approval, we'll be doing more of the breakdown of how this will work, and we'll let you know when that happens. Yeah,
Going back to what you were saying, getting the information out about this program access to small businesses. I'm not going to commit anybody in this room's database, but there are certain people that I'm not gonna look at that happen to have a very extensive mailing list of small businesses. If I turn my head, I know they're gonna start smiling, so I'm not gonna turn my head. But maybe that could be, maybe a prepackaged flyer, maybe even with a QR code that if you scan, takes you directly to the webpage that has that information, but maybe, like a template flyer that I get in my hands and I can get sent out and say, hey, this is what's coming. Contact your local lender and see if they're participating, and here's a QR code to get more information about how this low cost, low interest loan is out there.
love that. We will be providing that. And I love that you said QR code because that's currently the back of the flyer. So there will be a flyer that is available for everyone in this partner marketing kit. That's basically a few PDFs in an email blurb, and it will be pre-written, templated. So all you have to do is copy and paste to send it to anyone you would like. And we would love to see everyone send it out, get the word out. We appreciate all you've done so far to get the word out. I know I've gotten a lot of referrals from many of the partners in this room. So we appreciate all the work you've done and appreciate future efforts to let them know about the program. Yeah,
So just understand, most of the funding, the $1.2 million for technical assistance will be allocated for the Spanish language TA program.
a
Is
portion.
a
I've
portion.
got another section coming up.
Okay, okay,
Yeah, not all 1.2.
okay.
So this will just be a portion of the funding. So we'll basically have a certain portion allocated every year to this to provide it. We've calculated that based on percentages of Spanish speakers in Utah, talking to our lenders about what we think the demand will be. And we'll work with, as we build that RFP, once we get approved, we'll work on what those metrics look like and exactly who that will serve and what the checks and balances will be on loan volume, demand. And so our objective is to make sure that any Spanish speaker trying to get a loan, if they are a good candidate in every other area, language should not be a barrier to that application. Okay, so the next section. Okay, so this is the second piece of our technical assistance program that we have applied for. And I really appreciate Nubia Pena and Ryan Starks for helping kind of inform the early stages of this. And so I'm going to pitch this. And so I want to make sure a couple of things are clear when I pitch this. One, we are not trying to reinvent the wheel. We are trying to scale what exists. And two, one of our objectives with this program is to get resources out into the community within the restrictions of the funding. So I did try, I wanted to apply for maybe some funding for language translation. That is not eligible. Marketing is not an eligible expense in the TA program, which seems we didn't write that. I'm sure there are reasons why that exists. So what we've done here is, we have pitched this finance course and grant program. So here's what that would look like. We build a core course that is digital. And it's an advanced finance course that helps small businesses move from kind of wanting capital, but it moves them to, I can walk into a bank and get a loan. It cleans up their financials, it cleans up and teaches them how to really navigate the space of getting a loan. It is for USBCI, but it is going to be built a little broader, so it could live beyond the program and it could be used in general for capital access education. Once that exists, and it'll be built such that there's a core component to it that is course, but there is also pieces of it that are in person. So there will be questions, whatever. So the objective is that there will be like a video, but it'll run in cohorts in person. So there will be questions or guiding questions to help cohorts run in person. With that, actually, I should say, once that exists, then we have a grant program where nonprofits can apply to run cohorts of this program. And so the objective of that was to get funding out to the organization on the ground working with small businesses. That grant is really built so that we have a reason within the constraints of the TA program guidelines to get finance, technical assistance out to small businesses, to scale really great programs that already exist, maybe out to rural Utah into places where they don't quite yet. So I really want to hit that hard. We're not trying to reinvent the wheel. I know there are great finance programs in existence. I've talked to many of them actually in building this program. We're just trying to scale this. We're trying to expand resources and consolidate, maybe use some of the state's partnerships and network to take what exists and expand it, and so everyone can benefit. Yeah, so again, a key piece of that is there will be a CPA attached to that. So businesses in the cohorts will receive CPA access to review financials prior to applying for a loan. So this is also one of the things in the application. So we're still pending feedback from Treasury. And obviously this is a big partnership endeavor. So we have seen a lot of interest from those we've been talking to so far, but as we get further into this, I will release more information. And if you're interested in participating, just let me know. Any questions on this? Yeah.
I just want, well, probably more, but, so whoever runs, whether you grant money to run the finance course, develop on the finance course, cohorts, all that.
Yep.
There's a slug of money that goes to service providers, like your CPA example, is that what I'm hearing? So, if one needs to employ CPA, it's, for instance, to help somebody put books together, to apply for a loan. Who contracts with that CPA and how is it funded?
So we contract with them and it would be part of the grant where the services are provided. However, we're still mapping out how that will work internally, meaning we'll wait for the Treasury to give us approvals before we move forward on any contracts applications and really beefing that out.
Okay, thank you.
Yeah.
Are you gonna be providing sort of soup to nuts services as well? Like we're working with startups, right? Business plan, business projections, things of that sort. So not just existing, getting the books in order, but really like.
That's a wonderful question. I would say our objective with this course is to be an advanced finance course because USBCI ultimately is for probably businesses who are right at that growth stage. The CAP program can do startup. It's a little trickier, but that's the closest to startup it does. So the ideal business is probably someone who's been in business for a little bit, is looking for funding to scale of some sort, right? So we're really trying to target that market and not duplicate the efforts of many of the Finance 101 series that exist in many organizations. So I think we will develop that. What we've proposed is that we will hire a few consultants to consult on the project from the community and from our banking sector, because ultimately what makes this really powerful is if it's really good and connected to the banks, because we need to make sure the banks will accept it at the end of the day, right? And so I will let you know more about how this is structured when Treasury approves my application. I did submit a funding structure of how this works. We're still waiting for approval. Thanks. Okay. Any other questions? Cool. Okay, so Before I get to this, I want to mention, excuse me. Take some water really quick. I want to mention one more thing. So I think in some ways, we do want to acknowledge our limitations. So I know one thing that we've been talking a lot about throughout this process is the need for marketing, for outreach, and for resources. One thing I want to bring up is that we have partnered with the Inspire in Utah campaign at Go Utah, which is a marketing resource to get education and resources out to women. So we have partnered with them, which is really cool because that gives us a lot more marketing resources than this program allows otherwise. So that is a really cool arm we're partnering with to get the word out. We're also really working with partners. So we're trying to really, hit every sector, make sure the word gets out in every direction. But that's one really cool thing we're doing to provide more resources to the program. Other things, I think I've mentioned this before. We just want to say, with demographic reporting, I know we've talked a lot about that. We've talked a lot about language. So we have really worked hard to respond to all the input we've gotten over the last year with these meetings. I have brought things up to Treasury. I have talked to other states. We've talked a lot internally about how we navigate this, what we do. So I just want to say thank you for the input. It really has gone up the chain and caused a lot of really important conversations to happen around accessibility, around marketing, around how these programs are designed. When I talked to Treasury, they were like, please send us everything from these meetings. They were just really excited to have the input. I think people always get the input they want sometimes. And so they're really excited, and hopefully it can help inform this program in the future, and maybe future programs they write. They'll have that input on the demographic reporting, and maybe some changes can be made for the future. But we are really looking forward for this program to start issuing loans to borrowers. We think it'll be a wonderful program, and we're grateful for your help in putting this together. Thank you. That's all I've got.
Hey, Alicia, this is Nubia. I also just wanted us, you thanked us. We want to also thank you. I know that you have been so incredibly receptive to all of the various feedback that we've given, especially as it relates to strengthening any type of outreach efforts for the SETI communities. And I know that this has been a huge lift. So you've been so gracious, and you consistently thank us, but you have really been the one driving this, and you take everything that is given in these partner meetings and you implement. And that, I think, for us, especially as we keep showing up and giving our advice and our suggestions and our recommendations, it shows not only that you care, but that our investment is valuable. So thank you for making this a space where we feel included and incorporated in the vision for how we can be more economically inclusive. So a lot of love to you, sis. You did a beautiful job.
Thank you, Nubia. That's so kind of you. Well, thank you all. So great for you to be here. So with that, we'll call it a wrap. There's more food if you want any, and you're welcome to stay and mingle. We've got the space for a while longer. Thank you so much.
Thanks, everybody. Alicia, good job.
Hey, just a heads up. So guidance.
Yeah.
There's no way to anyone. I don't want to get into the way of getting at this.
Is this an owl or is it your?
That's mine.
Good work with you. Don't worry.
I know, I miss you too.
How's Morgan? How's Logan? How's Bye? You did? Are you serious?
Yeah, he is so cute and a handful, and I don't know anyone has a child. Yeah, see?
So I have the same dog.
Yeah,
You
we
do?
have the same-
When did you get it?
He's our- I don't know if anyone has children after this experience.
Imagine Holly. Fantastic job. Good job.
Appreciate you coming.
Imagine four and a dog and a cat.
I don't know how you're.
Across 3 schools,
Like,
a high school and middle school. Thank you. And Amy's working now at the school.
You always have like halos and things.
Oh, we have like.
Finally got comfortable enough that now he's a terror. So now it's like, it's like I let you so much, but like I need
What's his name? No, that's cool.
That's
Oh.
he's a cutie.
Alicia?
Yes.
Last week.
Oh, last week?
He sleeps.
Yeah.
All the pictures are.
So
See if
you're
I've got
really
him.
body training right now?
I don't know if we haven't seen his puppy or what, but he's body right now.
Honestly, our puppy was.
Thank you so much.
I'll be in touch about this.
Okay.
Because I think that'd be a great opportunity to kind of cover a big portion of it.
Yeah, love that. Great. Well, looking forward to hearing from you.
Yeah, no, I'm excited. This is
Thank
Good
you.
luck with their business. Thank you.
Thanks so much.
Thank you. That's, yeah. That's good. I'm good. Yeah, I was in Disneyland last week, so that's like, not a vacation. It's like a, this is shiver, but not like that. I totally am. It's like, you know, he bit me. That's my seat. Why you spit it? The DVD doesn't work. I'm bored. Are we there yet? I gotta go potty. Don't hit me. Stop hitting. He hit me again.
Yeah, now you're fine.
So lots of fun, really relaxed.
So relaxed. Get up super early to go get there. Get there. I just get one CL. That's what my in-laws do. Before like just sleeping. Chill. Yeah. But yeah, we're good. I think we're on myself again with the new changes. Yeah.
I miss that.
Yeah, I know. I was thinking the same thing. Yeah. Okay. You're like maybe like June of next year. Pretty booked. No, yeah, January. Great. Yes. We're gonna see it. Yeah. This is. Yeah.
Yeah.
So wrong.
We try to make.
I grew up. Like it? So I lived up here. I miss my. I thought it was getting a 16. I figured out you guys are trying to realize that. Well, I haven't extended my business. Yeah. That's neighbor. My wife. We lived in San Diego. I think the program. And then she lived there. How she here. That's really makes it. So looking forward. Oh, I don't. This is new. So now I'm not. I love feeling that's the real. It's not Mexican. I just want to talk about it. All right, my wife's thanks for being here. I'm Bob's boss. Yeah. That's fun. We made the change in October. We're still on get to speed. This program is so big. There's so much going on. Yeah. And we'll have a whole marketing toolkit. Does that help? Is that? Are you still? Yeah.
How are you?
I'm having a blast.
The only time I see you is when I'm here, so. And you're fine.
So that's Friday, because we're still launching by the 13th, which is over. Yeah. No. No. Some passports. I love Does anybody else? Yeah. Sit down. Drink like one bottle. I just. That's all I gotta. Thank you. Thank you.
Bye, guys.
Bye.
Bye.
Yeah. Did you know she's actually on the
Yeah.
You just need to know. Yeah, actually, this is part of that's non-construction. Association. Thank you. This was well done. We'll take over. It's like they still. Okay. They're like. I. We will. It's there. It's just. We know nobody knows what's so many years from now. It's much how we plan it out. Just like you want to plan 3 years from now, we'll see you in
Yeah, it's gonna be interesting to see if we can get legs, you know what I mean?
Right. If we're finding to make it up in the end, if something's wrong. So that if somebody takes an I don't have to put you. I'm trying to avoid that as for you, for us, for everyone. Because I want
I think the first program will have our data and keep you the secretary and passing our formal.
You will, I knew, when he said those, I'm like, I think we're talking to. I'm familiar with numbers, I'm like, those don't sound quite right. Right, if you're leveraging those losses, this is what that's the equivalent of.
Related to it, so you can't.
Because frankly, that's the whole premise, right? These are the.
But obviously.
You've got traditional.
Share those peers, mistakes, so that's why we're using data for it and we're just gonna watch
It's not
it.
really where we're trying to go. It's the in-between, which is, just those. They're really close, and that's the sort of we're kind of. So if there's like, say, too many, they're going down, too went too deep into the unbanked. I'm in, I'm in right now. I'm in the best. You guys can manage.
Well, the thing that I've talked to a couple of people. This is thing over 10 years.
Or it's aggressive, maybe that's what I'm saying.
Who got the money 10 years ago? So. Thank you.
You've done that, right? You managed the space. That's what you'd have to do last time. You've already managed the space. As long as possible and circulate.
Anything that I can do to assist, please.
You were just fine. I didn't take.
Sounds great. I'll shoot the marketing materials out and that'll be the big one.
We want to make sure you're taking care of